It's not about trend. It's about essential. It's about the comfort, right? And really, the a second pitfall that we're often seeing is really tying up the capital in fragmental and long tail assortments with low margin velocity. We often see that the 80/20 rule, for some reason, is still not applied across a lot of our private label partners that we work with. And why does this happen? Because again, everybody's going to 100 miles an hour, right? You have buyers and you have, as well as the private label development team, that often work in silos. And then the private label has to be pushed down the throat, I say, to the buyers for them to buy because it's a house brand. But there's not a lot of conversation sometimes happening of what actually the buyers are seeing in the market, where the branded product needs to fill in on top of your private label. I always think of analogy, private label is your bread and butter, and everything else on the branded product, what you put is what you put on top of your sandwich. And so that's the way to think about it, being collaboratively working together between the buying and merchants as well as your private label and design team is going to be very critical. And what we often seeing, it is because those teams work often in the silos, then where we start to see it's those long tail assortments that don't have a big margin, they don't sell as much, and they don't drive 80% of your revenue. So we always say revisit your assortment, look at what 20% drives 80% of your revenue. Everything is a tail that you don't really need to focus on. Probably cut it out and really stay focused and go deep into the styles that are really well performing. As another big pitfall is what we're seeing also is that a lot of the brands are trying, and private label brands especially, are trying to use like a one size fits all approach in category development. When they really need to really tie in, the risks adjustments into their investments, really thinking about different category will have its own capital investment that would need to be in order for you to be able to develop, whether it's a fabric commitments. I mean, wovens, for example, versus knits, very different fabric commitments and MOQs. Looking at, as well as, how long it's going to actually take into investing in different factories to be able to build out this type of assortments. Looking at where's your lowest investment that can bring you the highest ROI is the key, especially when you're just starting up your private label initiative. And finding the categories that are important to your customer, essential to your customer, and focusing on those is going to be the way to win this. Why does this actually happen? I often ask myself, and I really think it's because the growth pressure creates really reactive decision making. As the retailers grow and they start to really get the momentum, they're under pressure to be able to deliver higher margin product. And so that is when we start to think about and jumping into the private label initiatives. But a lot of times we're not thinking about, are we actually ready to do so? Do we have the systems? Do we have the support? Do we have the process? Often when we are coming in to our client, we then have to really derail and step back and then first fix all of those operational processes and systems, and then make sure that it will support the private label efficiently, so that when we bring in a higher margin product, we're actually not eating up that margin with being not optimized on the operational side for private label initiative. Many retailers today who are currently don't have private label and thinking about it potentially might not be set up for private label. So thinking about how do you do it in a strategic way, in a lean way, so that you don't put huge investments straight up front. You want to test the market first. There's different ways and strategies to do it that I'm always happy to share with you guys as well. Really thinking about going back to those 4 pillars that we've talked about, right? It's the velocity. Can this product move in the volume with really stable demand? If not, scaling will always increase your risks if you are really into the product that is potentially not going to be able to be stable for your demand. So even potentially survey your customer and understand exactly what product do they actually need day in and day out.